Hey folks, welcome to today's daily Bitcoin update. Today we have ourselves a nice little downward move, and I do think it important that we talk about this new leg to the downside. Most importantly, we got to pull up the weekly chart and point out that we are going to retest the weekly 200 moving average once more, right? We initially touched down here around mid-November, late November, and then we had a relief rally testing the top edges of the downward expanding distributions, and now we're heading down for our second test. It's going to be most likely that we're going to get an initial test, a bounce, another bounce, and then price action is slowly going to decay into that long-term bottom that is going to last for the remainder of the year, right? This is most likely the most probable scenario because of the previous crash pattern and the propensity of crash patterns to end on major institutional benchmarks, right? If we look at our previous crash pattern, we busted straight through the top edge of the distribution, and we returned right to the center of data for that distribution, retesting it once, twice, and then there's a slow taper off of price action where things get very boring. And you'll notice as soon as our midterm distribution starts to expand to the upside, right? So the 50 band starts seeing net expansion upwards, that'll mark the beginning of the bull run for the next run on Bitcoin. So at our current time and place on Bitcoin, well, it's going to be very boring. We're going to get a lot of sideways trading action, and we are going to be in a range for at least the rest of the year. Okay? If we take a look at our shorter time frames, we can talk about this most recent leg down. If we pop over to the 4-hour chart, we can define our new downward expansion of this distribution and actually take a look at the signal that we could have caught to realize we were now getting a downward motion. Okay? First of all, it's very important to notice that every single CCI period was weighted to the downside, and we had a wave PM cross, which signified short-term mass expanding over long-term mass, okay? When this happens, it implies the beginning of trend as distributional subsets are now on the move. You'll notice that a 14-period CCI did overexpand here, or the 14-period wave PM, excuse me. So when the 14-period CCI rolled up, price is now trending to that relative 14 mean. If we pop down to the 1-hour chart, we can actually define how far that will retrace. However, just looking at the 1 or the 4-hour chart, it is incredibly important to note that tagging that 3.2 standard deviation is going to act as a brick wall for price action, and it is going to be very difficult for price to actually trend back, or rather for price to continue trending down below those benchmarks, right? Now, it doesn't mean that the downward trend is over when you tag those benchmarks. It simply means that it's going to be very difficult to continue pushing price in that direction, at least for the short term. This usually results in bear flags or short retracements. So let's pop over to the 1-hour chart and talk about how this is actually playing out, right? Our longest overexpanded period on this chart is the 140 period. So we're going to switch this distribution to 140 and have it the only one visible. Perfect. So by looking at the 1-hour chart, you can see how clearly that this has been providing resistance for a trend. Now, it is incredibly important to note that as long as we are below the bottom edge of this distribution, it counts as downward trend for Bitcoin, okay? So this pivot is going to act very violently. If we return inside, we are going to see retracement back up to the relative mean, which can happen through a trend or through a lateral move as the mean travels down to meet price. As we get this continuous downward expansion that we've been seeing, our target for the move is going to be the weekly 200 moving average, which is roughly around $3,300 at this current time. This downward expansion will continue as long as we're below the pivot, and trend will be defined by that pivot, okay? Really, that's about it for today's Bitcoin update. Every chart, every time frame is playing out pretty nicely. Again, I do think our most probable scenario is to continue trending down to our weekly 200 moving average, which I do need to adjust here because I have set to 140, right? 200. Perfect. And we are going to touch that down on that again, followed by a nice little bounce. Really, I do recommend layering up some longs directly on that 200 weekly moving average. It is very unlikely that we actually will break beneath that pivot, and your upside should at least be testing around 12% to 15% of the upside. Okay? It has been a pleasure, and I will see you all guys tomorrow at the same time. Perfect. Cool. You know, I left the heat on in my apartment, but I'm actually wearing pajama pants, and I don't want to show you guys. So I'm just going to have to deal with the heat. Actually, no, I don't. I'm going to open the door. Hold on. I am murdering my energy bill, but it's worth it. Oh, I have a nice little pot of tea here. Hold on. It's a little bit of silver needle and Darjeeling. I'm going to be sipping on this for today's live stream. Beautiful. And allow me to pull up the YouTube comments so I can see how you guys are doing. I am caffeinated for the first time in 3 months. I had a healthy tolerance break, and now, do I feel good about it? Let me tell you. Important note, I have 6% left on my battery, so I'm probably going to end the live stream when my phone dies. Beautiful. And allow me to pull up the YouTube. Super. That's really good tea. Well, actually, I have a candle alight over there that I was using to keep the tea warm, and now just everything's ruined because I can't stand up. GBP USD is playing out well. I bet it is, my friend. Because that was a really clean chart. Let's actually pull up the actual chart for it. Right over here. Beautiful. This bad boy. Nice. Okay, well, it hasn't been a full day yet, so it's not updating. GBP USD. Nice. Yeah, that's really dropping today. Yeah, that is a great trade, my friends. Right, if we tag that 3.2 standard deviation on the daily chart, it's going to be a strong rejection. You'll notice, this is the first time we have been this, okay, this is the only time I'm ever going to say it, overbought on this chart, right? Because take a look at this, guys. There's not an instance where we tag the 3.2 standard deviation and trend continues. It just doesn't happen, right? When you tag these benchmarks, you're going to get really good short positions. And the same is going to be true for the longs on the bottom side, okay? Now, it is important to note, if you're taking longs, it needs to be a green candle close inside, right? You don't want to buy when you're tagging it. You want to buy when you actually roll inside the band. Okay? This one would have failed. That's fine. However, if you see this kind of selling action, you probably shouldn't bet against trend. Which is important to note. If you are seeing new net expansion, it is a very bad idea to bet against trend, right? If mass is low, if you have a lot of potential energy, then that indicates the beginning of trend. And if you have the beginning of trend, well, you don't bet against it. If you, however, have a developed trend and you're tagging these benchmarks, then you're going to be much better off, right? So in this scenario, we have a developed trend. The trend has been going for a while, and that makes it much safer to buy when you tag those 3.2 standard deviations and sell when you tag them, okay? I'm going to try to find a nice compressed area for you guys. A little bit harder on the daily chart because trends are, well, since there are rarely periods of extreme compression on the daily chart to begin with, which makes identifying places of compression a little bit more difficult. However, just from looking at this data, you can notice that, again, when you do tag these benchmarks, it does act as a strong brick wall. Actually, it's really hard to find an instance where this fails. Okay, here it is. Nice. All right. You see this, guys? Where all our wave PM values are really low? Okay. Well, when we tag the 3.2 standard deviation on this new downward expansion, you don't get the reversal. Why? Because you're seeing net expansion of all periods in the same direction, which indicates the beginning of trend. Let me close that door. It is below freezing out there, so that's all I needed. This tea is so good. Yo, I feel like a superhero when I'm caffeinated. It's amazing. I can understand why people Do it all the time. I used to like take pre-workout every day and just hit the gym all the time, but I should probably get back into that habit. I don't know. I got a pretty big tolerance, and I just decided to stop doing caffeine and alcohol, and I've been feeling a lot better. But today I got the secret sauce, my friends. Okay, back to the comments. See how you guys are doing. Do your classes cover all the reasonings behind the Bollinger Bands and the 3.2 standard deviation? Yes, I absolutely do. I'll just tell you why I use the 3.2 instead of the 3. The third standard deviation is an institutional benchmark. However, there is a lot of herd-induced volatility as a result of it being a benchmark. So if you use a value slightly above the benchmark, you can actually catch the volatility pop of people stopping out of their positions after the 3.2 standard deviation, or after the third standard deviation fails. So by using the 3.2, you're actually betting on the fact that price is going to be continuously pushed up, seeing a volatility pop to the upside, and catching something that other people are failing, right? So I'm going to point this out as an example. We're going to change the 50 band to the third standard deviation here, okay? And I know it's doesn't seem significant, but there's a good reason, right? If you short when you tag the third standard deviation, well, there's often volatility pops to the upside as people stop out of their positions. So by adding the 3.2, you actually catch the wicks in the opposite direction, which allows you much better risk management. Rich in the Brain says, are you changing the 3.2 period depending on overexpanded periods or 3D wave PM, or just sticking with 53.2? I'll be honest, you need to adapt your 3.2 standard deviation to match whatever chart you're looking at for accuracy, right? If you're looking at something extremely volatile, like let's just click on a random cryptocurrency here, you'll actually notice on a lot of the lower cap coins, the 3.2 standard deviation is much less respected because it doesn't require all that much liquidity to push price past those extremes, right? And that's another reason why we actually use the re-entry of the band to identify our entries and exits. Okay, what you guys got for me? Please make my screen a bit smaller. Is my face too big? It is. I see. Okay. Boop. There you go. Cairo says BTC 140 on the 1 hour pivot, but why would we bounce down from that? It's overexpanded already. Good question. It's because trend is already defined and you are in a state of trend. And you don't want to bet that trend will end until the trend is actually over, right? If momentum continues, it doesn't matter how much force it would require to continue pushing, well, because you can simply overexpand to higher periods as long as you're in a state of expansion. All right, let's go ahead and check out DNT. Yeah, this is a good one. AT 2020, I went to school for music production, actually, and I switched over to crypto when I discovered that chart technical analysis made you more money than musical technical analysis. So I'm actually, you can guys go ahead and check out my SoundCloud. I've got about 300 songs. I released about a third of them over the last 5 years. But again, this makes me more money. So I still make music in my spare time. If you guys actually want to learn a song I'm covering right now, it's actually this band, Ice Pressure. They're really good. It's a song called Abgrund. This album. This bad boy right here. I'll just link this in chat for you guys, okay? I learned this song last night. It was pretty fun. Okay, you can listen to that on your own time. More comments. DNT BTC. Yep. Let's get off the daily chart. It's not the most useful thing on crypto, I'm going to be honest. That's quite the retracement. A lot of coins look like this right now. Okay, so this is kind of cool, guys. I really like this chart since it's an excellent example of volatility overhead. Wow, that's really clean. Okay, so if you have an upward expansion like this, and let's define this period. It appears to be one. Actually, I'm just going to let the adaptive MMA, since that'll be a little bit more clean for us. And this is the longest indicator to load up, so bear with me. Here it is. Okay. So it looks like there's been a lot of high price volatility directly on the pivot, which implies that it's being fought over quite frequently. And as soon as you re-enter the band, we did revert down to the relative mean. Now, what's interesting about this chart is the opposite downward expansion resulted from the previous volatility overhead. And that's being defined by the 60 period. 55? 55 it is. Okay, we're just going to use the 50 for the sake of sanity. So because the 50 period remains as the most overexpanded, because it's hard to cause new expansion in periods that already were overexpanded from previous overexpansions. And this is a bit hard to visualize, but this is an excellent concept of volatility overhead in action, where the new downward trend is being limited because it is difficult to re-expand previously overexpanded periods before they've had a chance to fully and sufficiently compress. So that's why this new plume actually stops out around this area, because it would take an unrealistic amount of force to cause the re-expansion of previously overexpanded periods. I know, a little bit advanced for just going over a live stream, but I felt like it. I'm a little high on caffeine, so bear with me. I still got like half a pot of tea left, guys. This is going to be a great day. You know, I'm actually going to go get my tea warmer because my tea's getting cold. I'll be right back. That one. Cool, BRB. Okay, my tea will now stay warm. I've returned. All right, let's take a look at XRP. If I remember correctly, we did predict a downward expansion about 2 weeks ago. Let's see how that's playing out. Oh, look at downward trend is sustained. Hooray! Guess where the downward signal was? Was it the 1 hour? It might have been the 1 hour. All right, we had a really low volatility overhead with downward weighted CCI periods on net expansion. I think we predicted that support would break around this location. I could probably dig it out of a chat I'm in, but you guys don't want to watch me do that. It would take me like 5 minutes to dig through 2 weeks of chat history. And now we're getting a new trend as defined by this overexpanded period. Yeah, still bearish chart. Let's see how far down we've retraced. Around that area. Yeah, 5%. It's clean. I should have called it. I didn't. That's my fault. I always worry when I leave my email open and then I get notifications, right? Thankfully, we just get things like about paint pouring, like Amazon ads. Nobody else emails me, if that's the truth, but you never know what's going to pop in my email box. I got to keep that closed. BCHABC. That really broke support. Goodness. Man, that was such a clean breakout too. It's surprising to see it fail so hard. Right? We had this complete compression over here with a net expansion to the upside, and it just absolutely failed as it crossed the pivots for mean reversion. LRC, if you will. It would be my pleasure. Okay. Loop ring. One of the few coins I actually know about. I don't know about half the shit coins I trade. Actually, you guys want to... Let's load up the adaptive MA so we can actually point out where trend ended. Give it a second to load. I have to go to a higher time frame, though. You know, this actually might still be in a state of trending due to the extremity of this overexpansion. It is. Right, this blue band defines trend. It's a quick dip to the downside, but that's CCI roll up there. Still technically in a bullish state. It's extremely high risk, though. You would need a 9% downside to play this safely. However, your upside is 64%. It's like, what, 8 to 1 profit ratio? Maybe a little bit less, 7 to 1. But if you want to take that risk, go ahead. Let's see if we can define trend on, say, the 15-minute. Because if we have a new overexpansion and the most overexpanded periods drifting up like that, we might get something really clean here. And it looks like we're seeing net compression, so we're actually not in a state of trend on the 15-minute. So let's actually pop down to the 5-minute to see how we can best analyze this. Yeah, really nicely compressed. Previous overexpansion is based on 220. Let's load this up here. And it's 200. Wow. Yeah, so just compression from the previous mean reversion. Not the best of entries down here. Not yet. Let's try the 1 minute, since that can provide us with entries if we're looking at the right signals. Right, because overexpansions to the downside and the relative CCI rolls can actually be really effective for catching longs. No, not yet. It's there's been no significant moves down here, so there's nothing we can do. Actually, this right here is pretty interesting. I want to analyze this, just for the sake of curiosity. I mean, there's nothing we can trade down here, but not on this chart yet. But the way this overexpansion happens, I want to find out why. Right, because we have the initial plume to the upside, and then it's actually a downward expansion of the shorter periods that continues the trend. And there's actually no true volatility overhead in this sense. It is bizarre. So we need to load up a 63 period. Okay, adaptive MA just loaded. Okay, yeah, that's what's causing the weirdness. Is the plunge straight through the most overexpanded period, and its continuous re-expansion is actually what caused this new plume to form. That's really interesting. It's a clean chart. Although really mean reversions down here are still excellent trade opportunities. Right, like this instance down here, as soon as we re-enter the band, we revert to the relative mean. Obviously, down on this time frame where you need tighter entries, you need to rely on CCI rolls to catch this downward sloping entries, but like, that does rule out a lot of the trades though, but you need it on the 1 minute chart, if I'm being honest. But really, if you use this to define your trends, you're going to be well off. If we look at the 3.2 standard deviation, we can actually figure out how we would take profit on this as well. No, you would have exited preemptively. Right there. Oh, we can use a quad CCI to actually take profit. With the right settings, of course. Let's change this to 21 and 100. Nope, didn't do the trick. Let's try 30 and 200. That might do it for us. Okay. Yeah, take profit in the same place. Although, in this instance, wow. Okay, well, I'm done messing around down here. Back to the comments. Euro USD. And the link. Yeah, let's do Euro USD first. Oof. Oh, you guys probably heard that. This is a sensitive microphone. Welcome to the first ASMR cryptocurrency analysis. Just kidding, we're not doing that. Just figure out how many keywords of trends we can slap into one video. Because I'm pretty sure ASMR is searched more than CCI, if you know what I mean. Okay, I'm on the 1 minute chart. I'm sorry. Hold on. Ooh, look at old notes. I wrote this back in May using the same strategy. That's great. 50 mean period volatility is heavily weighted below the 200 distribution, probable downward, and will expand to the downside and result in probable downward moves if sideways trading continues. Would you look at that? Sideways trading continued, and then a new downtrend began. That's fucking great. Price volatility would be high at key pivots if probability volatility does not support the direction of trending, leading to choppy trading, which is exactly what we got for that duration. The lateral trading did eventually result in a downward weighted move because the new downward expansion weighted itself to the downside due to the direction of mean period volatility. Goodness gracious, why don't I just stay up here and trade? And then actual... Okay, see, like using the CCI to take profit is much more effective on these kinds of charts because these signals are so much cleaner. Like your short take profit would have been right here in conjunction with the 50 CCI or the 50 wave PM and then the CCI combo roll up. Okay, what do... Right, I need to actually analyze this chart. I'm sorry. I am so ADD. I need to caffeinate more often. This is fun. You're getting extreme trading range. And it's not really due to because of any compressing periods either. If you're seeing a chart like this, your best bet's just to trade extremities. Yeah, just long here, short here, short here, long here. Okay? That's really your best bet right now. And yes, I do see it. You would have had a position here as well, and it would have stopped out, but you would have entered a second time, and you would have been very well off, right? That's the good thing about trading. Because when you're wrong, you lose 0.3%, and when you're right, you gain 2%. Profit ratios, my friends. This is a great range, though. I'll be honest. Yeah, if you just want to range trade this, wait for the right CCI or wait for the right Bollinger Band signals. That's going to be your best bet. Upland Mines. Haha, Silicone putting hits out on Sarah for 150K on Twitter. I have no idea what that means. Fill me in with an explanation. Who is Sarah? I actually don't follow Silicone. I use him as one of my tags in my videos. simply because people search for him. I know, dirty, but I do it. My tea is warm again. And I'm still at 6% battery. What a good life. We got a good number of viewers today, and I'm feeling good, so let's just keep this going as long as I want. Might do some live trading. That would be fun. If I can find a good chart that I want to live trade, I'll do it. Can you talk about any differences in application of this strategy for Forex versus crypto? I would love to. In Forex, you're going to have much better time trading extremities due to the higher required liquidity. Higher required liquidity in order to push price beyond extremities. Okay, so that's the number one instance. Number two instance is mean reversion trades are going to be much higher probability on shorter time frames in Forex, whereas mean reversion trades are going to be much higher probability on longer time frames in crypto. Okay, since if you're sitting down here on the 5-minute chart and you're mean reversion trading, it's going to be a lot better off because news is less likely to ruin your trade down on these time frames. Also, you really must do fundamental analysis when doing Forex. For crypto, you don't need to because it's a market based on blind speculation anyway. So, I am not an FA. I'm terrible at FA. I do not like it. That's why I don't trade Forex. Okay? Because I don't like the thought that news can randomly ruin my trade, even though it was statistically probable. Although you can counter trade news rather effectively, right? If you see a large move like this bad boy right here, this is probably news, okay? And then since it generates mass, as soon as it enters its relative band, yes, it does revert to its relative mean eventually. It's a pretty clean chart, right? But when you get on the longer time frames, your trades have a much lower probability of succeeding. And we can actually see it on NZD AUD. I think that's what I did. Right, because we had a really clean mean reversion position up here, and then fundamental news came out, and it actually ruined our position. I think this is the chart. This is not the chart. I don't remember what it was. Sorry, guys. Okay, point remains. And obviously, crypto has much lower liquidity, so that's the biggest difference. Horror Coder, where can I learn more about the Bollinger Bands you are using? I'm curious about how you decide to change sometimes the period of the Bollinger Band. If you go ahead and open up the YouTube channel, just click on the description, go ahead and check out the playlist made by my developer, A Cat with Charts. There's about 2 hours of content going in depth on each individual indicator, explaining how each one works. Alternatively, you can go ahead and check out my website. I do offer about six or 7 hours as it's planned. I've got 4 lessons out right now that goes in depth from scratch, everything you need to know to be completely comprehensive with my trading strategy. Right now, that's on sale for $360 for 6 hours of content, and it's going to be going up to $400 as soon as I finish all the lessons. That's really your best bet to learn about everything I do. If you want the absolute basics of what I'm doing, go ahead and check out Mark Whistler's Macro to Micro. It's a book, and that's actually how I developed a lot of these indicators. However, to answer your question, it's actually not going to tell you why I adjust my periods as the way it does. It's just going to give you the fundamental vocabulary to understand what I'm doing. I mean, I developed these indicators over a period of several years, of course, with the help of A Cat with Charts. But this entire strategy is very derivative of the original work. So it is unique enough of IP. I'm going to check out Amazon. I'll do link first for Michael over there. Link BTC. 19 viewers, hooray! I guess if I make myself look nice and put myself on screen, I get more viewers. Who would have thought? Okay, Wow. I have no opinions. What did I sell my link at? Hold on. Just give me 1 second here. I'm curious what I sold this for. I still have about... How much did I sell? Order history. Hold on. Okay, I sold at... Damn. Actually... No, that's fine. I stopped out right here when the new downward expansion began. And now we're just a little bit higher than that. Okay. Well, I obviously made the right choice. I stopped out of a majority of my position right here. We dipped down 16 fucking percent. And now we're up 0.2%. Holy hell. Well, that was quite the ride. That was a 16% drop. Bizarre. Absolutely bizarre. You know, we saw, again, tagging that 3.2 standard deviation here really results in some high volatility and potential mean reversion. I don't know. I actually might sell more of my link. Yeah, a lot of people on 4chan like it. I mean, that's how I actually get a lot of my viewers, is I do TA for people. Just for free, for fun. You know, I want to build a community, and where a better place to do that than the asshole of the internet. That is good tea. Okay, back to the comments. John Harris says, if you are trading Forex with this strategy, are you saying it is more suited to short swing trades or perhaps even more day trades versus long-term swing trades? What time frames would you suggest? Shoot. Mass is a concept that transcends time frames. And I know that sounds pretentious, but bear with me. Okay. If I have the most overexpanded period of mass is 50 on the 4-hour chart, the most overexpanded period of mass is going to be 200 on the 1-hour chart. So what time frame you're on doesn't matter, right? Because if you're on the 2-hour chart, the most overexpanded period is going to be 100, and so on. So actually, all these overexpansions, my chart, my Bollinger Bands, are going to look the same no matter where I am. So time frame doesn't really matter. Of course, eventually, once you get on the higher macro time frames, then you have to start using institutional benchmarks, and you can be much more successful over there to actually define trend. So if you're on, say, GBP USD, I went over this in yesterday's live stream. If we take a look at the monthly chart, right? I have to go to you'll notice, would you like fucking that? Most overexpanded period is 200. That's hilarious. Right, you get high price volatility at the key pivots of the institutional benchmarks. Just over and over and over and over and over. Right? Why? Well, it's because they defined expansion or compression for trillions of dollars of positions. Right? And that's why they're so well respected, because it's probably how institutional black boxes decide whether or not to be in positions. Oh, Amazon. Yeah, 1 second. Yeah, you got the CCI roll to the downside. Implied short position. Sure. I mean, a little bit late to get that short entry. guess for this previous overexpansion, what are we looking at? 240? $240. Yeah, that has defined trend rather well. So, of course, well, we have to trade laterally as defined by the 240 until, oh, never mind, volatility overhead's gone. We can technically trend below this band. I mean, trend is down. If you want to take short entries, go ahead. Just be careful of tagging that 3.2 on the downside. That's where you probably close your position. Sure. Short-term bearish on this. You know, we got our repeated swing highs. I guess let's define the retracement value for this bad boy. 110. Oh, that's going to be clean. I already know it's going to be clean. Just shy of the mean reversion. I'm fine with that. Yeah, downward action is implied, for sure. Oh yeah, people, like this video, tell your friends. Always happy to do this for you guys. Get your final charts in, folks. I'm going to call this one quits pretty soon. I'll just see what else you guys have got for me, okay? Also, gonna get the earnings report soon. That is going to cause a lot of high price volatility. We do get overexpansion of mass whenever that hits. That's going to be a big deciding factor on this position, actually. Sure, you can enter now, but you probably should wait for the impending volatility caused by the earning report, okay? So actually, I would not recommend a position on this just quite yet. We do Litecoin. TC. I'm going to open up the window again. I'm hot. There you are. Nice trend. Ooh, yeah, we just missed a good long. No volatility overhead. This is a really good chart. Yeah, this can trend quite significantly. I wanted to. Just wait for the next CCI roll to the upside and you'll be good to go. Very nice. One last look at the comments here. RVN. Cool. I got nothing for you, man. Sure, it's a range. Trade the range. It's really it. And I don't really like this kind of trading, but you can if you want. Sure, you can go for that one. 4-1. That's about all I have for you there, though. Any final questions for me, folks? Really, guys, if you want to know more about what I'm doing here, highly, highly, highly recommend you take my course. Just follow the links in the description. And again, it's about 6 hours of me doing nothing but going into the advanced details of what I'm doing here, okay? I do this every day at 1 p.m. It is very much in your interest to tune in, okay? With no further ado, Dead Shark out. Have a beautiful day, folks.